Hey everybody, and welcome to the Real Estate Weekly Market Update. Thank you very much. We go over all the different news items. We go over all the different statistics from the different counties, all today, every Friday, about last week's numbers. So we're going to go over May 18th through May 24th. We're real excited to the market's just crazy at the moment. The amount of news that are coming in is it's overwhelming, and the numbers we're seeing are astronomical. So to start all off here, we always go over the news first. I hope everyone out there is ready to listen to Ryan. He has a lot of news items that hit this week. Ryan, what's some of the highlights?
You know what? It's just amazing because the mainstream media, the big outlets and stuff, they're finally catching on to what we've been saying for the last month and a half, 2 months. And we always say it, when this thing rings, the market is hot. And they finally are seeing it in the numbers, and they see it in the consumer confidence, really. And so we're gonna be like a speed dating around here today because there's a lot of slides to cover and we're trying to keep it short. So let's get right into it.
Let's get right in the news.
All right, in the news. So this is where we're at. Honestly, we've got the real estate glass is half full and it is rising, and this is where we're gonna be here any second. It is gonna be overfilled. Consumer confidence is rising, and it rose unexpectedly in May as the economy reopens. And let's be honest, the average consumer is who fuels everything through their spending, and when they've got confidence, they go out there and spend, and the economy rebounds.
Well, what's interesting about this particular stat that was published by CNBC is that since they come out with so much negative news, it was kind of surprising to them because people aren't tuning them in anymore, or they're actually picking out what news they want to listen to. They feel it's real and maybe not so real. So for us on the other end, when the pandemic hit, there's obviously that kind of haziness in us. But as we continued week after week, we didn't see what was being predicted, and more confidence was there. And then as we rolled into May, I think we're getting a whole different attitude in the United States right now.
Absolutely, we really are. And so here, we're just getting into some of the nitty-gritty. Applications for mortgages to purchase homes gained for the 6th consecutive week to a level that was 6.7% higher than a year ago. So get this, it's kind of expected. All right, purchase money applications, they're growing week after week as we get closer to, COVID, restrictions and shelter in place, being lifted, and people realize, hey, the market didn't crater. But it is now, applications are 6.7% higher than last year when there was no COVID, there was no worry at all. And that is an important stat. We've told people over and over, we started this year on fire. We expected it to be going here, and not even COVID could really hold it back.
Slow down this market, yeah.
Seasonally adjusted index. So basically, they look at the seasonal adjusted numbers, and it jumped 9% last week. And it blows my mind. And refinances, they're down a hair, but they're still almost double what they were at last year. And we know that's because lower rates. And demand is being driven by a shortage of homes on the market and these lower rates.
Now, so this is the lowest. Tandem. I mean, mortgage applications to actual homes. Look at it's all time. You're just seeing the separation. There's not enough homes, and there's too many mortgage applications being taken right now.
So true. So supply of properties on the market at the end of April was 1.47 million. Get this, that is the lowest level ever recorded per NAR. So nationwide, because we bring you a lot of data that's local to us, and that's why we've been so rosy all throughout this COVID pandemic, because we understand what entry-level pricing, is doing in those first two move-up tiers. That market has been hot, it's stayed hot, and now we're finding out nationwide they have the exact same issues. There's just not enough inventory. We know there's a nationwide shortage of homes, and there's also a shortage of listings, homes for sale.
So what's been interesting about this, Ryan, is that all you did for the last 6 weeks was heard all this negative press.
Yep.
And what you're hearing is home sales are plummeting. I've seen that headline at least 5 times.
Absolutely.
Home sales are plummeting. Well, what you're seeing now from National Association of Realtors is the supply not only plummeted, it hit all-time lows. So if you have all-time low inventory and you have which means you have less choices and less people to actually buy homes. That's why sales went down. So let me ask everyone out there, and you could comment on this. How many people heard the news saying that we had all-time low inventory? We definitely heard we had all-time low sales, but all-time low inventory. Well, no, I never heard it once, and I'm a pretty avid listener to like KNX radio out here in Southern California, but I never heard that once. I just had heard the negative news, and that's what we ran up to.
And this is a thing. They're right. Sales are down because inventory's down. But what the stat is that they're not covering is the one we started with, 6.7% higher mortgage applications than this time last year. So that shows you the amount of demand. It shows that there is pent-up demand, and it completely overshadows the available inventory. And as we know, based on numbers we reported, I think it was last week or 2 weeks ago, that it's roughly 3-to-1. The buyer demand for each property here in the entry level market in Orange County is 3-to-1. That's absolutely insane to me. And rates, so we talked about it. So last week, here's the 3.24 number. Keep that in your head because it's already dropped from there. We'll cover that in a little bit. And new home sales. So now we want to get into new home construction. What's going on with that? We already know there's a 3.3 million, housing shortage in the U.S. and they're not building fast enough. What has COVID done to them? There was some, right off the bat, they had some negative numbers coming in. Oh, new home sales are cratering. And I know a lot of the news articles are driven off that. Yeah, they're cratering because they shut their doors. There were a lot of new home builders. I went out to show a couple homes. They literally shut their doors, not even open for appointment. And you have to remember, a lot of the construction got slowed down. You had crews that couldn't come. You couldn't get materials to the job site. And so things completely slowed down. But where are they at now? 6.2% drop on an annual basis. But there was a 0.6% over what they estimated sell. So they're already outselling their estimates. And as we know, with consumer confidence and everything else going on, we expect these numbers to increase. A couple of interesting numbers to me are that the 6.3 month supply, I've been told that anything under 6.5 month supply is a very, very healthy market for new home construction. And this is nationwide. You've got areas in the Pennsylvanias, certain areas just completely shut down altogether. And then what's the industry saying? So this is the new home builder industry. So they're talking about the April data, and they're showing that shows the potential for housing to actually lead any recovery. So this is National Association of Home Builders. They think that new home construction is actually going to lead recovery for the nation. That is absolutely amazing to me. And they're saying that the fact that housing industry entered this downturn underbuilt, there exists still considerable pent-up housing demand on the sidelines. The experience of the virus mitigation has emphasized the importance of the home for most Americans. I've talked to so many people, I know you have too, Troy, that they feel like they had no control over their own destiny and their own lives there for a couple months. And the people that were renting, they wish they had control over their house. They wanted to be able to go out there and do a project and plant in the garden and paint their room and redo the tile in the bathroom, and they had no control over that either. And they realized, hey, I want control over where I live. If I have to go through something like this again, I want to be in of that house.
Right. So,
and then chief economist of National Association of Realtors, he's still sticking with his V-shaped recovery. He's a sharp return to almost normalization in home sales. And what he's pointing out to right here is there was no evidence of any dent to home prices during this pandemic. And we've been bringing you these data, and we'll show it again. Median home price sales really didn't move much at all. And this is an interesting fact I found. Housing led the economic recovery after recessions in almost every period going back to 1950, and that home builders need to be actively involved, which we know they are, and that home construction work and the buying of lumber will help boost the economy. So we know we ran a stat, how many jobs were created and how much money each new home being built put into the local economy, and it's a huge sum. It blew my mind. And that's the thing you have to remember. For each house that's being built and being sold, the lumber, it's the labor. There's just so many factors that go to it. It's awe-striking. And then we talked about rent growth. So let's say you're still on the sidelines waiting for that, I want to wait and see what happens to housing. Well, let's talk about what's happening to your rent. It's been going up, and it's been going up at 3.4%. That's been the growth in rent, and it dropped. So last month, it only went up 2.9%. Well, let's be honest. It dropped because you couldn't get people out, you couldn't evict. A lot of people just decided not to show rentals that they had on the market, and so that dropped. They expect that to go back up, and just know if you're sitting in a rental, these are the numbers you can probably expect for the near future. And in 33 of the 35 largest metros, year over year rent growth slowed in that month. So that's the first time it had slowed in quite some time in those markets. And here we go. So now we're seeing it from different perspectives, but this is from Freddie Mac. Here's your rate, 3.15. I know we were talking about 3.24 before. That is now the new low. April's plunge in pinup home sales could mark the bottom. So the chief economist from NAR is now saying that April will likely be the bottom for pending contracts, and May probably will be the pandemic's low point for sales because it takes about a month to complete a transaction. And now he's calling the bottom. Boom. This is what he's saying the bottom's going to be. And we're starting to see mainstream media catch on. Bidding wars are back in housing market, stung by pandemic. I don't think it got stung. I think they just missed the mark on the numbers they were reporting.
Well, you got it. If you're recording that, if you're reporting negative news, and then the news is there's too much positive, you've got to actually go back and use those words like stung. It was never really stung. So.
Yep. And then, just talking about forbearances, I know we mentioned 8.3 million before. It was 8.3% of homes were forbearance, so it's 4.2. So there was a smaller uptick from 4.1 million to 4.2. Still a big number, but it's less than what they had been projecting.
And those are forbearance. Let's actually call it
approvals.
What it is.
Yeah, it's an approval.
Right. That doesn't mean that they actually went through the forbearance. That doesn't mean people that decided they went 1 month in forbearance and then came out of it.
Great point.
There's none of those. Just like all the negative, unemployment numbers. They only talk about new unemployment claims. They don't talk about net unemployment claims.
Yeah.
How many people went back to work?
Well,
that's kind of the.
And it's strategic. Some of those people said, "Hey, look, I'm going to make more, especially with this extra $600 a week." Being unemployed, go ahead and fire me, lay me off, whatever you got to do, furlough me. I'll take that money and then move on my merry way. There was a lot of strategic.
Well, my son does it right now.
Yep.
My son's doing it right now. He said, "Dad, I'm gonna concentrate on school while I got 4 months of money that's coming in from the state and the federal government off of unemployment, while I can actually better my education and not have to work
and make more." He's making more, right?
Yeah, he's actually making more.
Yeah,
it's ridiculous.
So that's interesting. I talked to one of our contractors. We do a lot, that does a lot of work for us and for our clients the other day. And, he had a couple weeks where he couldn't work on some of his owner occupied properties and stuff. And so he filed for the forbearance. They gave it to him the 3 months, no problem, no questions asked, just breathe on a mirror. You got it. We'll stick it to the end of the mortgage. And his thing was, I probably could have got by. I had enough other jobs on vacant homes I could have gone and done. It would have hurt for that month probably, but I would have got by. But hey, if you're going to tack this on the end of my mortgage, let's do it. I get to skip 3 payments. And I saw him out at the river last week. So I know he was in his boat having a good time. So let's be honest about, what these numbers really are. Yeah. There are quite a few people out here who really needed this. And these are fantastic, vehicles to be able to give this stimulus to them. But the numbers that we're seeing aren't all that. So what do we got here? REOs, Troy.
REOs. So as everybody, as the sky was falling in April, sky didn't fall actually. It didn't even flinch. Actually, it's kind of funny now. We're seeing even further proof the market's still strong as REO activity is gone down. It's gone down and down. I mean, it's crazy. So all you out there that are saving their money aside to buy a bank-owned property, you might have to pay another 10 years of rent or 5 years of rent before that ever comes to fruition. And it doesn't even matter at that point. You've already burned your money.
That's it.
So
that's it. It's if you look at it, these are all trailing numbers here too. And they weren't able to foreclose for a few months. They weren't able to evict. So I think these numbers are just going to dwindle as well. And, if somebody is in trouble, let's be honest, the prices are shooting up so fast, they can get that home on the market and get out of that home before they're in a bad spot. So if they need to exit, they can exit in this current market. So actives, Los Angeles County.
Yeah, I mean, we're really looking at some crazy numbers here. We've just seen a complete turnaround in LA County. We've now, the pendings alone have now surpassed the actives on this scale. So what we're seeing in the future is that every home that hits the market, it's already showing that it's pretty much sold, or at least as many hit the market, it's jumped into pending. The solds are still trailing. This is the 30-day outlook. So in 30 days, as we continue to see the rise in pendings, we're going to see the rise in sales here in the next week or so. Let's go to Orange County. Same thing. Actually, if we just roll through these counties, same thing. The actives are the pendings are outpacing the actives, and in this particular county, the solds aren't very far behind. So, but if we go,
and these were the two that we were worried about because they have a lot of the higher price point homes, and that's where you're getting into jumbo loan limits, and that's where the market's stagnant. So it's great to see that even these two counties are seeing a reversal of their fortunes about with the pendings and
it's loosening guidelines. Going back to the guidelines prior to pandemics, because all their predictions were all wrong. And so now they're going, oh, well, I don't want to miss out on the market. If I can get jumbo loans back on and they're performing, hey, if you have a job and you've had a job all the way through the pandemic, you're performing at this point. Yep. So take that. San Bernardino County and Riverside County are absolutely off the charts.
Insane.
It's the affordability factor there. You have, the loan limit for FHA is 422. And then, of course, you have to put 3.5% down on top of that. So you're pushing at the 450 plus range. Guys, it's getting crushed. I mean, this county, San Bernardino and Riverside, the pendings are off the roof. The affordability, people are willing to actually go out to those two counties and drive into LA and Orange counties, right?
And look at that.
And we're seeing one thing I want to say is industry. Whether it be strip malls, we're starting to see all those cars start piling in, and we're starting to be the building is going to start coming back in. So we're seeing the revitalization of those areas. We're absolutely, and I've seen this a lot of vacant homes I'm showing. Why? Owners are kicking tenants out, and they're actually selling, and they're rehabbing the home for a little bit and getting the most money for it. So now we're replacing renters with owner-occs that are making those neighborhoods better and more attractive, and so people are feeling more comfortable buying in the IE. So you get the Riverside, the number in Riverside.
It blows my mind.
Yeah. Go, Ryan.
It's got to be a typo.
It's not a typo. The amount of pendings last week just shows you that this is what the market would be if we didn't even have a pandemic. We already are at highs. I mean, and I'll call it right now, guys. This is going to be the greatest real estate market we've ever seen. It just slapped
Put it on the record.
The pandemic in the backhand of the pandemic, and that generation of millennials, first-time home buyers, are not scared, and they have just went out in droves now. And as we've been talking about, they're out there and they're buying and buying and buying and buying, and that is showing. These numbers are definitely showing it.
Yeah, and we had that little bit of reprieve for a couple weeks there where people were like, oh, maybe I will sit out. So that, all of a sudden you didn't have 10 offers on that home. You had 3, and you actually had a better shot at getting it. Now we're back up to those 10 offers on a home again. And you really got to do everything to get your offer accepted. You got to come in hot. You've got to basically win at everything. You've got to win at the price. You got to win it having a good communicating agent. And a good cover letter and financing, everything. You need to put your best foot forward, and you need to be on top of it the second you see that home and be ready to pull the trigger. All right, median prices.
Yeah, median home prices they've been steady for the last few weeks. I've noticed that we've had a little bit of a jump here just recently on San Bernardino County, but it's not very much. Well, because I think that we're getting so many entry-level homes, because those are the hottest ones that are selling. Everything entry-level is just flying off the shelf. So our medium home prices in Southern California are definitely steady and just moving up very, very slightly.
Yep. And then here we are, the holds and withdrawals, cancels.
Those are steady.
Against the actives, and yeah, they're all kind of seem pretty steady and like the same proportion and ratio. But it does show you too in LA when we're looking at those 1,100, that come active. Really, it's only 781 new, numbers
net
of homes and net that's hitting that market. So it's still healthy when you flip back up and look at the fact that you had 1,169 pending and 700 solds, because that 700 of net actives cancels out with those sold. So even that truly is a healthy market. So.
Well, guys, thank you very much for a weekly update. If you have any comments, please comment on it. We actually post this on Facebook, Instagram, and YouTube. We'd love you to subscribe to the YouTube channel. As we just got on it, we're starting to build it right now. Hit the IG, hit Facebook, see when we're live. Comment. We're more interactive with you on our lives, which are on Tuesdays and Fridays. Ryan, what else do you have to?
You know what? Definitely subscribe. Next week we should have the new numbers from the local MLS, and those are great. It shows days on market, how many months at inventory. So we'll bring you some great slides on that. And if you subscribe, you can even go back and see prior weeks and see what we've been talking about the last couple of weeks, because we do bring different data points and data sets throughout different weeks. And you can see, this is what we've been calling out, all along. And really, it just comes down to this phone. This is a consumer confidence right here. When they're calling it, it means they want housing. And that's what's going on right now.
Well, thank you very much, guys. Appreciate you tuning in. We'll see you next Friday with the next real estate market update.
Yep. Peace. God bless.